What's up, everybody? Let me tell you, if you're looking for the next NVIDIA, the next stock that could potentially skyrocket like it did, then you need to pay close attention to this video. I'm talking about serious potential gains here, the kind that could completely change your financial future. We're diving deep into 5 companies that I believe have what it takes to be the next big thing. We're talking about innovative tech, solid fundamentals, and a whole lot of growth potential. These aren't just random picks, though. I've done my homework, analyzed the numbers, and I'm here to break it all down for you. So, if you're ready to potentially turn a few $1,000s into a whole lot more, buckle up, because we're about to explore the exciting world of high-growth stocks. With that being said, let's get right into it. First up, we've got Broadcom, a true titan in the semiconductor industry. Now I know what you're thinking, semiconductors, sounds kinda boring, right? Wrong. These tiny chips are the brains behind everything from smartphones to cars to the latest gaming consoles. And Broadcom? They're one of the biggest players in the game. We're talking about a company with a market cap of over $400 billion, supplying chips to major players like Apple and Samsung. Their portfolio is incredibly diverse, spanning networking, storage, and wireless communication, making them a critical part of the tech ecosystem. And let's not forget their recent performance. We're talking consistent revenue growth and a strong track record of profitability. But here's the kicker. Broadcom is not just riding the current wave of semiconductor demand, they're actively shaping the future. They're heavily invested in research and development, focusing on key growth areas like 5G, cloud computing, and artificial intelligence. This forward-thinking approach is what sets them apart and makes them a compelling investment opportunity. One of the most exciting things about Broadcom is their position in the 5G revolution. As you know, 5G is set to be a game-changer, enabling lightning-fast internet speeds and powering the next generation of connected devices. And guess who's supplying the chips that make it all possible? You got it, Broadcom. They're already a leading provider of radio frequency filters, a crucial component in 5G smartphones. As 5G adoption ramps up globally, the demand for these filters is only going to explode. We're talking about a massive potential market here, and Broadcom is perfectly positioned to capitalize on it. But it's not just about smartphones. 5G is going to impact everything from self-driving cars to smart factories, and Broadcom's chips will be there every step of the way. They're already working with major automotive companies to develop 5G solutions for connected cars, and their expertise in industrial automation positions them well for the rise of smart factories. Now let's talk about Broadcom's commitment to innovation. They're not content with just resting on their laurels. They're constantly pushing the boundaries of what's possible, investing heavily in research and development to stay ahead of the curve. In 2022 alone, they poured over $7 billion into R&D, focusing on key areas like artificial intelligence, cloud computing, and next-generation networking technologies. This dedication to innovation is what fuels their growth and allows them to constantly expand into new markets. And it's not just about developing new technologies, it's also about making strategic acquisitions to bolster their portfolio. They've made several key acquisitions in recent years, including Symantec's enterprise security business and CA Technologies, further solidifying their position in high-growth markets. Next up, we're diving into the world of high-performance computing with Supermicro, or SMCI. Now, this company might not be a household name like Apple or Amazon, but trust me, they're a major force in the tech world. We're talking about a leading provider of enterprise servers, the backbone of data centers around the globe. These aren't your average desktop computers, folks. We're talking about powerful machines designed to handle massive amounts of data and power, everything from cloud computing to artificial intelligence. And SMCI is known for building some of the most advanced and efficient servers on the market. But what really sets SMCI apart is their focus on customization. They offer a wide range of server configurations and components, allowing customers to build the perfect system for their specific needs. This flexibility is a major advantage in the rapidly evolving world of data centers, where one size definitely does not fit all. Now let's talk about the massive growth potential of the data center market. As more and more of our lives move online, the demand for data storage and processing power is exploding. We're talking about everything from streaming services like Netflix to social media giants like Facebook, all relying on massive data centers to function. And as the demand for data continues to skyrocket, so too will the need for more powerful and efficient servers. SMCI, with its focus on high-performance computing and customizable solutions, is perfectly positioned to capitalize on this trend. But it's not just about the sheer volume of data being generated. The rise of artificial intelligence, machine learning, and other data-intensive applications is driving the need for even more specialized and powerful servers. SMCI is at the forefront of this trend, developing servers specifically designed to handle the demands of these cutting-edge technologies. Alright, moving on to company number 3 on our list of potential next NVIDIAs, and that's AMD. Now AMD has been around for a while, but they've really been stepping up their game in recent years, and it all starts with their Ryzen processors. You see, for the longest time, Intel was the undisputed king of CPUs. They dominated the market, and AMD was kind of like that scrappy underdog that just couldn't quite catch a break. But then Ryzen came along and changed everything. Ryzen processors offered incredible performance at competitive prices, putting a serious dent in Intel's market share. I mean, we're talking multi-core performance that went toe-to-toe with Intel's best, often at a lower price point. This was huge for consumers, because it forced Intel to innovate and lower prices to stay competitive. Competition breeds innovation, and in this case, it led to some of the best processors we've ever seen hitting the market. But AMD isn't just about CPUs, they're also a major player in the graphics card market with their Radeon GPUs. While NVIDIA has historically held the performance crown in the high end, AMD has been giving them a run for their money, especially in terms of price to performance. Their Radeon RX 6000 series cards have been incredibly popular, offering excellent performance for gamers, especially those looking for a more affordable alternative to NVIDIA's top-tier offerings. Plus, AMD's also been making waves in the software department with their Fidelity FX technology. Fidelity FX is a suite of tools that developers can use to enhance the visuals in their games, and it's been getting a lot of praise for its ability to improve image quality without tanking performance. This kind of innovation is crucial in the constantly evolving world of graphics technology, and let's not forget AMD's presence in the semi-custom market. They power consoles like the PlayStation 5 and Xbox Series X, which is a testament to the performance and efficiency of their technology. This diversification is key for AMD's long-term growth and stability. So, with all that in mind, is AMD the next NVIDIA? Well, it's definitely possible. They've got the technology, the market presence, and the momentum to continue their upward trajectory. Their focus on high-performance computing, both for consumers and businesses, puts them in a strong position to capitalize on the growing demand for processing power. From gaming to data centers, AMD's got their hands in some very lucrative pies. Of course, investing in any individual stock always carries risks, and past performance is never a guarantee of future returns. It's important to do your own research, consider your risk tolerance, and maybe even consult a financial advisor before making any investment decisions. But one thing's for sure, AMD is a company that's worth keeping an eye on. Don't forget to hit the like button and subscribe to help our channel grow. Alright, let's talk about Snowflake, a company that's been absolutely crushing it in the data warehousing space. You know, data is the new oil, and Snowflake provides the pipelines and refineries to make sense of it all. Their platform allows businesses to store, analyze, and share massive amounts of data, and they're doing it in a way that's faster, more efficient, and more scalable than traditional solutions. Now, Snowflake operates on a consumption-based model, which is great for businesses of all sizes. You only pay for the resources you use, making it a cost-effective solution, whether you're a small startup or a Fortune 500 company. And trust me, businesses are flocking to Snowflake. Their revenue growth has been nothing short of explosive, and they're showing no signs of slowing down. What I find particularly impressive about Snowflake is their customer base. They're attracting some of the biggest names in tech, healthcare, finance, you name it. This tells me that their platform is robust, reliable, and in high demand. Now, I'm not saying Snowflake is a guaranteed home run, but with their strong market position, innovative technology, and impressive growth, they're definitely a stock worth watching. One of the key factors driving Snowflake's success is their cloud-native architecture. They've built their platform from the ground up to leverage the power and scalability of the cloud. This allows them to offer unparalleled performance and flexibility to their customers. And because they're cloud-agnostic, businesses can seamlessly integrate Snowflake with their existing cloud infrastructure, whether it's AWS, Azure, or Google Cloud. Now, I know what you're thinking. Graham, isn't the cloud computing market already saturated? And yeah, there's definitely a lot of competition out there. But here's the thing. The cloud market is still growing at an incredible pace. More and more businesses are migrating their operations to the cloud, and Snowflake is perfectly positioned to capitalize on this trend. And let's not forget about the importance of data analytics in today's business world. Companies are sitting on mountains of data, and they need tools like Snowflake to extract valuable insights and make informed decisions. This is where Snowflake really shines. So, what does the future hold for Snowflake? Well, I'm bullish on their long-term prospects. The demand for cloud-based data warehousing solutions is only going to increase in the coming years, and Snowflake is well-positioned to be a major player in this market. They've got a strong track record of innovation, a loyal customer base, and a massive market opportunity ahead of them. However, it's important to acknowledge the potential risks. Snowflake operates in a highly competitive market with established players like Amazon, Microsoft, and Google, all vying for market share. They're also facing increasing competition from smaller niche players, and let's not forget, about the potential for regulatory challenges as governments around the world grapple with the implications of data privacy and security. But even with these risks, I believe Snowflake has what it takes to succeed. They've got a talented team, a disruptive technology, and a clear vision for the future. And with the data revolution in full swing, Snowflake is well positioned to ride the wave of growth for years to come. Remember, this is just one stock idea, and it's essential to do your own research and make informed investment decisions. Last on our list, let's talk about Crowdstrike, a company at the forefront of the cybersecurity industry. In today's digital landscape, cybersecurity is non-negotiable. It's not a matter of if, but when a cyber attack will happen. And that's where Crowdstrike comes in. They provide cloud-based endpoint security solutions that help businesses prevent, detect, and respond to sophisticated cyber threats. Now, what sets Crowdstrike apart is their Falcon platform. It's a cloud-native platform that uses artificial intelligence and machine learning to provide real-time threat protection. Think of it as a 24/7 security guard for your computer systems, constantly monitoring for suspicious activity and neutralizing threats before they can cause any damage. And the best part? Crowdstrike's Falcon platform is lightweight, easy to deploy, and doesn't slow down your systems. This is a major advantage over traditional antivirus software, which can be clunky and resource-intensive. And with cyber attacks becoming increasingly sophisticated, Crowdstrike's AI-powered approach gives them a significant edge over the competition. Now, the cybersecurity market is booming, and Crowdstrike is riding the wave of growth. Their revenue has been growing at an impressive rate, and they've been consistently adding new customers. This tells me that their solutions are in high demand, and that they are effectively addressing a critical need in the market. One of the key growth drivers for Crowdstrike is the increasing adoption of cloud computing. As more businesses move their operations to the cloud, the attack surface for cybercriminals expands. This creates a massive opportunity for Crowdstrike, as businesses look for comprehensive security solutions to protect their cloud environments. And it's not just cloud security. Crowdstrike is also well positioned to benefit from the growth of other emerging trends, such as the Internet of Things or IoT, and the rise of remote work. These trends are creating new security challenges, and Crowdstrike is developing innovative solutions to address them. Looking ahead, I'm optimistic about Crowdstrike's long-term prospects. The cybersecurity market is only going to get bigger, and Crowdstrike is well positioned to be a major beneficiary of this growth. They've got a strong product offering, a growing customer base, and a proven track record of innovation. However, it's important to acknowledge the competitive landscape. Crowdstrike faces competition from established players like Symantec and McAfee, as well as from a number of smaller niche players. This competition could put pressure on pricing and profitability. Another risk to consider is the evolving nature of cyber threats. Cybercriminals are constantly developing new tactics and techniques, so Crowdstrike needs to stay ahead of the curve and continuously innovate to stay ahead of the game. But with their strong focus on research and development, I'm confident that Crowdstrike has what it takes to maintain its leadership position in the cybersecurity market. So, there you have it. 5 stocks that I believe have the potential to be the next NVIDIA. These are just my own personal opinions. Remember, I'm not a financial advisor, this isn't financial advice, and you should always do your own research before making any investment decisions. The stock market can be unpredictable, and past performance is not necessarily indicative of future results. If you enjoyed this video and found it helpful, please give it a thumbs up and subscribe to my channel for more videos on investing, personal finance, and entrepreneurship. And don't forget to hit the notification bell so you don't miss any future uploads. Thanks for watching.